Hello everyone, I am Jaykumar, and in this video let's see what were the FI's open position as of last week. And before that let's see what happened to Nifty. So Nifty is near striking distance of its all-time high of 18,600, and if you see the Friday's closing was marginally above 18,500. So it has been just 100 points between high and the closing, all-time high and the closing. So there's a general expectation that as Sensex has crossed its all-time high, and if you see the main index Sensex and the sectoral index is Bank Nifty, so Bank Nifty also moved above the high. So only Nifty is yet to break the high. So there's a general expectation that Nifty may also breach its all-time high. If you see the Monday to Friday last week, the movement, let's see the movement. So on Friday's session the closing was around last Friday 18,308, and the Monday it opened lower and just closed around 18,150, 0.8% drop, and thereafter it stayed in a narrow range, and by towards expiry due to the short covering it went up above 18,500, and it closed well above 18,500. So as per charts, this is the scenario as on Friday. So if you see the last 2 weeks, the movement has been intraday movement has been very low. If you see the spread between high and low, as on Friday, if you see the day's low was 18,445 and day's high was around 18,535. It's only 90 points movement. So it has been some tough times for intraday traders, day traders, because for trading we need at least 0.8% to 1% movement based on the closing price. If you see it's around 18,500, so 1% comes to around 185 points. So if only the movement is between 160 to 180 points, then only then we will have some multiple opportunities for intraday traders. So otherwise it will be like a dull movement for intraday. If you see on Friday it was only 90 points, and on expiry date there was some movement, but if you take last 2 weeks, so it has been only narrow intraday movement, only between 100 to 120 points like that. So it has been really tough times for day traders. So let's see, based on open interest, what was the FI's position. So FI's on last Friday, if you see on 18th, it was the index long has been consistently the last full week. It is above 60%. If you take from last Friday 65, and if you see consistently, it has been maintaining above 60%. And on expiry day, due to the due to that short covering and the expiry of the November contract, it went till 77%. So the overbought zone comes to between 75 to 80 percentage. That is overbought. Like we saw on 2 months before, that is it was in oversold. The oversold long position went dropped to near 20 to 15 to 20 percentage. So the like the same way it has been now in the reverse. So if you see between around, if it is nearby 80 percentage, we can say that there is mostly longs. So mostly long means only if index have a big trigger, further big trigger, then there is a possibility of a higher jump. Otherwise, the market will be bullish, but it will be like inching towards high as it is nearby all-time high. Surely the momentum will be there, but we cannot say that it will have some big movements. Okay, because the full of market is full of longs. Okay, so if you see the last week buy orders, the buy orders were mostly above 50%. If you see Monday to Friday, Monday was 43%, but Tuesday 58, 51, 61, and Friday it dropped to 38%. So if you take 5 days, 3 days it was above 50%, and mostly there was no fresh longs. If you see on only on 23rd, 51% buy order and 12%. But if you see here, overall long percentage, there was not a big movement. Only it's dropped by 1%. So we can take this as a equal position. Both longs and short has been rolled over, or before expiry date it was. As market is near high, the rollover happens because equities, most FIs, if you see, they have heavy positions in equities, and the index they use as a hedging. So as they are buying in equity segment for the last few weeks, they may also use as a hedging in the future segment. And other than this, there are no big movement. If you see on expiry, it was 10% drop, and with that, the long percentage moved up. And on Friday session, that has been some short has been created at higher levels. If you see, the buy percentage was only 38 percentage, and OI change was positive 7 percentage, and index long slipped from 77 to 71. So you can treat this as a short position. Okay. So as per the coming week, this if index want to maintain the momentum, it has to break and hold above its all-time high. That is 18,600. So if it happened, then you can expect it can move towards to 18,800 to 18,900 in the coming days. On the downside, if you see, the support will be on the chart. If you see, the support will be this high, this peak, that is 18,000 around 400 to 450 range. So this will be the nearby support. And if you take the India VIX, as I said in the last video, India VIX is consistently at lower levels moving down. So if India VIX remained at lower level, then the bullish momentum will be maintained. So if you see, it is 13.3 as on Friday, and if as long as it stays below 15, we can say the bullish momentum will be intact, but the movement will be narrow. There will be less trading opportunity for intraday traders as the VIX is low, and the intraday moment for Nifty will be very expected to be low. So let's see what happens if index manage to break above or not. Let's see. Thank you. Have a nice day.